Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from LVER Global Corporation. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Trent McKendrick, founder and CEO, and Tanya Garcia of LVER Global Corporation, which trades on the OTCQB venture market under the symbol LVER. Welcome, Trent.
Thank you, Bob. It's great to be here, and we appreciate the OTC putting this together for LVER. And as a new participant in the market, it's exciting to, understand everything that's going on. I have Tanya Garcia to my left, I believe. LVER Global, I founded in 2022 as somebody who's worked in the debt management and collection space for over 10 years. I came to the US to understand and really delve into liabilities repayment, noting that there was a significant gap in the student loan repayment market. We've gone out and partnered and integrated with some partnerships that have allowed us to create a really exciting app. For the last 3 years, student loans have been on pause. So we're excited to get through and present you with exactly what LVER is, how we're going to be benefiting our users and creating value for our investors. Standard disclaimers, which I'll leave that on the screen for a couple of seconds. And then let's get into it. So from October 1st, 43 million student loans will be reactivated. That's millions of students grappling with debt, uncertain about their options and looking for guidance. As we would all be aware, over the last 3 years, the Biden administration has had a pause on student loans. No repayments have been required. Therefore, people have really dismissed it and not had it at the forefront of their mind. We're coming into a period where it is going to be thought about. And the problem really is, in the current state of student loans, is $1.8 trillion is the balance that's outstanding across 43 million students or student loan borrowers. $32,000 is your average balance. And in the past 3 years, this is prior to the pause, 11.4% were in a delinquency of over 90 days in default, meaning that they hadn't paid their student loans for over 90 days. Now, for various reasons, be it financial, administrative, or generally people may just not have cared, neither here nor there, that's just been the situation. The student loan crisis is deepening, affecting a significant portion of the US population. And by deepening, what LVER means by that is that it's coming to a point where people are going to have to start repaying at a time where interest rates are high, the economy's somewhat slowing down. We've heard numerous banks throughout the last few presentations talk about a 2024 a slowdown and a tougher environment for both businesses and individuals. So a product like LVER is going to be launching into the market in the forthcoming weeks, and we'd like to explain why and what it does for consumers.
Yeah, so the problem stands, a lot of it, especially in the beginning, is that students don't know where they stand in terms of their student loan because there has been that 3-year gap. So statistically speaking, 4 in 10 student loan borrowers will have had their loans transferred to a different company, which means that a lot of borrowers not only do not know where their student loans are, they also don't know things like the balance, they don't know their due dates. So they just are really unsure of where they stand in general. What we love to do is that we are not going to provide refinancing. We are providing a way for people to get in direct contact with the Department of Education because refinancing is not a great option for people who have federally backed student loans. And that is what we do. We work specifically with people with federally backed student loans and give them access to repayment programs that are beneficial for them. So we streamline the process of finding your student loans and then getting you into programs in the Department of Education. our whole point is to get you approved. So the streamlined process within our app will ask you the specific questions that the Department of Education asks so that you know that you're giving the correct information at the correct time to the correct people. That streamlines the process of getting approved a million times quicker than if you would do it on paper.
So on average, if a general student loan borrower was to go to their student loan servicer, and there exists around 28 right now after a consolidation in the past 3 years, those student loan borrowers post-graduation would need to contact their servicer, find out the programs that are available through the Department of Education, apply for those programs through a paper application, and then wait to hear an answer. Through LVER, our partnerships and our integration with the Department of Education APIs, our app actually streamlines that, allowing you to see exactly what's available to you, digitally produce a W-2, confirm that you are eligible for that program, and then enroll into that program. And throughout this presentation, we'll explain more about how that streamlining works.
So LVER offers automated payments, recurring payments, roundups, and access to hundreds of Department of Education repayment programs, all designed with student loans in mind. I myself am a student loan holder. So automated payments is really important, right? If you forget to pay, that's an easy access to delinquency. These providers don't usually typically tell you when you need to pay. So automated payments are really smart, especially with Department of Education programs because it's such a low monthly rate. So that just makes it a lot easier to pay. Roundups, so you can basically save up towards paying off your student loans as well. So we have multiple ways of getting you to pay off your student loans faster.
Try to make it hassle-free for consumers.
We help you discover, so we help students discover where their student loans are right now and then what programs they will match with. And once we are matched with that programs, we will again ask for the specific information required by the Department of Education to get you into that program, which helps you enroll. What we also do is that a lot of people don't know that once you are enrolled into a program, you will have to re-enroll every single year to stay in that program. So LVER automates that process for you. Every single year, we will remind you it is time for you to re-enroll, update any information that you need from the Department of Education, and keep you within the standards of the program so that you can get maximum benefit. We also help save time and money. A lot of the process within the Department of Education can run from 3 to 8 months if you're not doing it, from an app, if you're doing it on your own, just because a lot of times people present incorrect information or they lack the full scope of information that the department needs to get you into the correct programming. So the conversation back and forth stretches out the time to a long time. So you may start the process in January and then get through in August. And in that entire time, you're still going to have to be paying the money that you owe the department or owe for student loans until you are actually approved. So it's no more searching and confusion or missed opportunities for your time and your money. LVER ensures that you are right on track, saving you thousands over your life of your loan, depending on your loan.
So from a market size and opportunity, 43 million student loans being 93.1% of the existing student loans for postgraduates. That doesn't include people currently in college. Where LVER really focuses is post-graduation, somebody going into the workforce or somebody coming into the professional career is going to need to start repaying their loans. There are various and hundreds of programs that are available to student loan borrowers post-graduation. Those programs range from things to pay off faster through to government service workers who can get 10 years of payments or 120 payments through to forgiveness. And that's 6.9% of private-backed loans. They're generally a portion of the market that's been refinanced into, large banks or other people under a personal loan product. I will start to talk about some of the economics and the the investable side of this product. Whilst we've tried to give you a really nice picture of what the student loan landscape looks like beyond what you hear in the media. LVER has primarily focused and wanted to be that gateway for existing student loan borrowers to access Department of Education programs and then monetize that through enrollments. We have, since our infancy, onboarded over 30,000 people. We've serviced just on 800 to date. We're a very early stage company, but we have spent a lot of time investing into our product and building out processes and ways for our our consumers and our users to benefit. So on average, LVER helps users save $240 a month. These savings can be redirected into building wealth, investing, and securing financial futures. And as we spoke about early on in this presentation, we're dealing with an economy that's changing. Interest rates are up. 10-year bonds are at an all-time high since 2007. I was just reading on Bloomberg this morning. There is a number of things going on in the economy that are going to affect consumer balance sheets. So you're looking at, you're looking at a time where people are going to be looking to a solution for this. Whilst student loans come back online, we've been well and truly understanding of the process and what's going to happen into the future now that student loans come back online on the 1st of October. And the most important thing for, I guess, LVER and the unfortunate circumstance for consumers and services is the Biden administration hasn't actually offered a budget to those services for 43 million people to come back online. You have over 500 office locations across 28 services, and none of those people have a budget for 43 million people in the next 12 months to start repaying their student loans. As Tanya rightly pointed out earlier, there over 4 out of 10 student loan services have either consolidated or moved, meaning that borrowers don't actually know who their current servicer is. Now, we do have a product solution for that where we've integrated a number of credit providers and credit bureaus, allowing people to see exactly who their current servicer sits with, because that's obviously lifetime updated. And we also look at this and say, as a foothold or a step in towards helping people manage their liabilities, student loans are probably the largest debt most people or are the largest debt most people carry. Therefore, dealing with that will relieve them of some anxiety and give them room to, do other things like create IRA portfolios or look at managing other personal finance products. And LVER does have a roadmap towards those types of things that we will be implementing in the forthcoming years. It's just right now, the approximate 1.8 trillion in student loans that are about to start being repaid is where we really want to focus. So, we are poised for, significant improvement and the loan management experience for millions of borrowers. Obviously, the federally backed student loans gives us access to over 15% of the US people. The amount of there's 335 million people that live in the US, so 43 million people give us access to a large part of the country. And a really good part of the country where you've got a digitalized economy going on with Gen Zs and millennials who are finishing college. They don't want to deal with paper. They don't want to deal with speaking to anybody. LVER's product really streamlines that process all in app. LVER operates on a subscription model, so let's get down into the economics of it. We charge $79.99 a year, and this is our first year of charging. We will be looking for price increases over time. The important thing with this $79.99 is the upfront saving on average is $240 in the first month. So the argument is very simple. You pay $80, you save $240 in your first month, everybody wins. We create a good feeling and a great experience with that customer, and hopefully that will generate more and more business. Our current scenario and based on what's happened in the past 12 months, as student loans were to come back online and we had some forgiveness, then we had the forgiveness programs, was that our customer acquisition cost was approximately $40. We have a 10-year plus LTV representing the requirement for a student borrower that is in these federally backed programs to recertify year after year. We anticipate the current market churn rate or drop-off rate for these programs is 30%, where we think that our retention or our churn rate our retention rate will be much higher because we are offering a digitalized experience. We are providing this within an app, whereas a student loan, a student borrower previously would need to get a reminder from their servicer, speak to their servicer, submit a manual W-2, and then wait for an answer. They can do that all within the app, and within 7 days receive that confirmation that they're still eligible and going to be in that program. If the student borrowers don't actually recertify, what happens is they default back to their original program and they basically lose that ability, if they're a government service worker or qualify in various sectors or industries, they will then go back to their previous loan and then lose that year that they've just paid towards the 120 payments if they qualify for such programs. Currently, and some great work that's been done by our marketing team and our partnership team is that we've been establishing relationships with partners who have been servicing student loans in the past. You know, they don't monetize them beyond introducing them into new programs or getting them into a servicer. They do hold that data, and we will be marketing into that data, noting that our average, the average across that data is 34 years old. So that's somebody who has gone through college, has qualified, you know, let's say 7 years after they have graduated. We've had 3 years off. We think that that's really the prime customer for us. In the next 12 months, we anticipate to, we aim to sign 60,000 paying subscribers, generating $79.99 per user with a gross revenue of $4.79 million. And we're looking to reduce our CAC to $15. We'll be reinvesting our revenue. I mean, 60,000 is a nice round number and a good target for us. We think that proves a business case. But as we go forth and start doing private placements, we'll be looking to invest more and more into our marketing. This really just sits us to where we see the current scenario. Our product is live. It's available on the App Store, both Android and Apple iOS. We will be launching a web-based version into the future that is currently in development. We will see that probably around December for a hard launch in February 2024. Over the past 12 months or even more, we've been really fine-tuning things based on our customers' feedback, really looking at some of the programs and things that are changing with the Department of Education and try to streamline that for student loan borrowers to have the best in-app experience possible. We didn't talk much about the team. A bit of background on myself. I am finance. I was in finance for 8 years in Australia before founding a company called Credit Clear Limited, which is a publicly traded company on the Australian Stock Exchange. I founded that in 2013 as an idea. When I was actually visiting the United States, I noted that a lot of payday lenders were going online, and I was very passionate about, you know, how do we digitalize traditional financial, finance experiences or financial processes. My broking firm that I ran in Australia before Credit Clear was an online broker and one of the first. We have Martin Casey, an expert in venture capital. He's also a lawyer and has worked in large institutions like Credit Suisse. And we have Imran Faraz, who's worked and currently has dealt with companies and has sat on the board of NASDAQ and NYSE listed companies prior to joining LVER. So we have a wealth of experience on the board level. We are bringing on some more board members as we grow out our business. And so right now, LVER is really paused for resumption. We are in the midst of getting our DTC approval, which means that our stockholders who elected to lodge stock, sell stock into the market in our S1 that was approved in October 2022 will provide some liquidity into the market. We have been speaking to a number of banks about private placements, and we'll continue to do so. From here, if you have any questions, please put them on the board. I can see a couple have come in already. We have gone quite fast through this presentation, so if there's anything that anybody wants to ask or for us to articulate, please let me know. We have a question here. Does the student loan forgiveness program affect your business at all? Well, it actually enhances it, because at the time of student loan forgiveness, and that only lasted about 90 days, people were rushing to get a part of it. And because we have the partnership that allows us to get into the Department of Education APIs, we were actually able to help people apply for, streamline and apply for forgiveness. So we had a number of users that had already signed up, or a number of people that came to us to get access to forgiveness programs, which is really exciting for us. Our whole experiential approach is, how do we help people or general people on the street understand financial services, understand credit consumer laws, understand what's available to them, and then make informed decisions on their own without the need of an expert and, you know, high fees and things like that.
And to jump in on this question as well, forgiveness in general, as a basis of understanding, the people that have received forgiveness up until this point have been people who have been in programs previous to COVID. That's where a lot of the forgiveness has come in. So for student loan borrowers that applied for the forgiveness program, you know, through the Biden administration, they did not receive forgiveness under that specific programming. But if they were in other programs, that's kind of where it maximizes, and that's also super limited. While the number in terms of money is very high of forgiveness, the number of people that received that forgiveness is relatively low. It stays within the hundreds of thousands of people, where we're trying to reach, you know, our basis is 43 million people. So, I mean, we were really grateful in the beginning when forgiveness was, I mean, I was happy about it. I didn't get it, of course, but we definitely maximized by using our app to help people facilitate the application of forgiveness when it was up.
Thanks, Tanya. We also have another question here around our subscriber base and how we're working on growing that. Thank you for that question. So, as mentioned earlier, you know, there's two types of approaches when you build these types of companies. You have companies like Cash App who have millions of dollars to spend every month on acquiring customers and millions at a time, and you know they've got their CAC down to about $5 through referral and cash giveaways. What LVER's trying to approach this as a niche product that provides services to, you know, a niche part of the 43 million student loan borrowers. There are a number of factors that have really made us want to look at California, Washington, and Texas. Texas have the highest amount of student loan borrowers per capita. California has the highest balance, and Washington has the highest default rate. So we've kind of looked at those regions and gone in and partnered with some of those student loan advisory services. And we have access right now to over 300 lines of data or 300 records of existing student loan borrowers with an average age of 34 and a current balance of over $50,000. So you know, we're very excited by those partnerships and the ability to enter the market, not just cheaply, but through having access to direct information on those borrowers so we can provide them with personalized marketing. And Tanya's team are doing a great job with some campaign work. Last year, we had some ambassadors across professional sports athletes, and we're also putting together a list of high-value social media influencers across various platforms. But at this stage, what we really want to focus on, because it is a 12-month rollout, it's not that 43 million borrowers, you know, in 2 weeks' time are all going to be calling up their services. There is actually a runway or a 12-month you know, requirement. So by the 1st of October 2024, people have to be repaying their student loans. By the 1st of October 2023, people are asked to be repaying their student loans. So we're going to focus on the next 12 months, building out our subscribers and then reinvesting into channels that are helping or showing the highest value of return, aiming to get our CAC down to that $15 per subscriber. So right now we have over 300,000 records. We had over 30,000 people join the app, and we had 800 paying subscribers prior to really slowing things down in December, when we realized that last year in December, when we realized that student loans, it was like that constant false start. We had the July, we had September, then we had December, and it just, you know, the Biden administration was just pulling everybody along. And, you know, it wasn't just us. There's a lot of people across the student loan landscape, or you know, in the business that we're in, which is helping advise and deal with people that do it manually, who have even come to us and said, you know, we'd really like to work with your product or try to you know, enhance our business with such a thing. And obviously, you know, those are great opportunities. They're low-hanging fruits, but we're really focused on proving out our own company, not being a white label solution to others. So I kind of digress there, but to answer that question, yes, we're aiming to increase our user base to 60,000 subscribers, and then you know, utilize or monetize those subscribers where you know, to generate that 4.7 million in revenue and get that CAC down to $15 to create a high margin of return for our investment. Doesn't look like there's any other questions, but I am available if anybody wanted to book a call or a time to have a one-on-one. Again, our presentation has really been about telling the story of what LVER is and where we sit. As a newly listed issuer, we're really excited to be a part of the OTC markets and the opportunities that it brings to deal with a broader range of investors. Just touching on sort of our balance sheet, we have a number of private investors, including myself, who have been funding the business, and to date we have no current debt on the balance sheet. At the end of this quarter, all of our convertible notes will be converted, so we think we'll be in a healthy position to go out and raise some money, and also introduce some new investors into our cap table. Thank you everybody for your time, and again, if there's anything